Here's Vonnie Quinn with an Asian single best chart.
Right, exactly. A little bit of contagion, but also a lot going on in China. Today's single best chart showing the Shenzhen Composite Index through Thursday. It's down another 2.7% today, even after a fresh round of government support, Tom. And the rot now spreading to the Hang Seng, which is down 11% from its April peak. So you can see the S&P 500 there is the white line. The Shenzhen is the big spike in the yellow line, which is coming back now downtrend. So as you mentioned to me the other day, this shows the big speculation that we saw in China.
Well, the big hit has been taken by the smaller cap stocks.
Right.
If we have on the terminal the China Next Index, which just looks at the smaller cap stocks
what's that
in Shanghai. That's down 36%. So there's a real distinction there between the Shanghai overall and then the smaller.
Long ago and far away, in a chapter in a book called Flying One Engine, when Robert Hormats wrote "Expect the Unexpected," stealing that from Thatcher as he looked at China. What are we expecting in our unexpectedness of China, Ambassador?
Well, the Chinese are desperately trying to get the market up because they think the market's a symbol of confidence, and they also want a lot of these highly indebted companies to be able to, in effect, monetize their debt by creating assets in the equity market to pay off a lot of their large-scale debt. That's the big problem. They have to deal with the debt issue, and putting the money into the hands of small-scale stockholders is not going to be a long-term answer.
Well, can they manage the stock market like they've managed the housing market, for example?
I think in the way they probably can, not to the degree they've been able to manage the housing market. But the Chinese are very good at this. They've pulled all out. No more IPOs. They've put more money into the institution that enables margin trading, huge amount of money from the central bank through the margin financer to the actual companies. The mutual funds are now agreeing to buy more stock. I think they'll be able to do it. They just don't. They understand that some of the froth has to be taken out of the stock market. They don't want it to crash. And I think this is what they're trying to do. It's a reasonable policy given their concerns. Whether it'll work over the long term, probably not. They've got to find a way of dealing with the debt over a sustained basis. But this will help to avoid a major crash.